Hi, I'm Karan Thapar. Over the last few years, I hope you've been watching my program, The Interview on the Wire. During that period, I've interviewed doctors, politicians, businessmen, scientists, authors, and even the occasional Nobel laureate. For me, it's been exciting. I hope it's been enjoyable for you. But these, as you know, are tough times, and if this program is going to remain bold, independent, and sometimes even defiant, then I think we need your support. At the end of the day, it's a truism, but editorial independence is best defended by the viewers. So if you would like this program to remain the way it is, forthright, outspoken, and interesting, then would you consider supporting us? All you have to do is to click on the description at the bottom. But more than anything else, I hope you will continue to watch the interview. Your viewership means an awful lot to me. Hello and welcome to a special interview for The Wire. The Adani Scandal, as it's increasingly being called, has raised critical questions that we shall be addressing today. First, what is the response from SEBI and why is it silent? Second, what is the response from the government and why, other than a few minimal remarks, has no one from the government spoken? And third, and perhaps most importantly, has this raised serious questions about the effectiveness of Indian market regulation? And has it also raised questions about India as an investment destination? Those are the issues I should raise this evening with the former chairman of SEBI and the former chairman of UTI Mutual Fund, UK Sinha. Mr. Sinha, let me start with the response from SEBI and the fact that people are disconcerted by what they consider the almost complete silence of this market regulator. And before I ask the question, I'll explain the background why people are so concerned. On the day the Adani FPO was completed, Adani shares were 15% below what they were on January the 24th when the Hindenburg Report was made public. On Wednesday, Adani Enterprise fell nearly 30%. Yesterday, it fell a further 25%. During intraday trading today, it was down 35%, but after the Fitch report, it has ended up roughly 1% in the black. But PSU shares are now affected, although nowhere near as badly. More importantly, Dow Jones has announced that from the 7th of February, Adani will not be on their sustainability indices. Credit Suisse and Citibank have announced that they will not accept Adani bonds as collateral. Both the NSE and the Bombay Stock Exchange have put 3 or 4 Adani firms on additional surveillance, and the Norwegian Oil Fund has publicly announced that it has slashed its Adani holdings by 3/4, reducing it from $800 million to just $200 million, which means there is enormous concern not just in India, but internationally. And yet our market regulator, SEBI, is silent. How do you explain this?
Okay, thank you for inviting me. And let me start with a disclaimer that I do not own any shares in Adani companies. I have no inside information about what is happening inside Adani companies or what is happening inside SEBI. Having said that, to your surprise that why SEBI is not coming out with any major statement, and as you say, they are silent. Let me say that SEBI receives dozens of complaints on a daily basis. And one can argue that this is not one of the insignificant complaints, but this is a very significant complaint. But the point is, the regulatory philosophy in India and outside India is that you do not start commenting on any complaint on day one. You try to do what is called inquiry. Under the SEBI Act, SEBI has to protect the interest of the investors. And it has also to maintain the integrity of the market. If it starts reacting to anything at the first instance that is brought in, it might affect the interest of the investors badly, very, very badly. So there are 3-4 things which SEBI can do. One is to start an inquiry. And I will be extremely surprised that if SEBI has not yet started the inquiry already. After inquiry, if there is a certain stage where further investigation is required, investigation in SEBI's term is a technical term under Section 11C of the SEBI Act, which gives SEBI a lot of police powers and all that. And the third element is surveillance. I'd like to tell your viewers that SEBI has one of the most technologically advanced and most sophisticated surveillance system in the world. And that SEBI surveillance action has already started showing results, has been evident today. For example, what is surveillance? You start watching all the trades that are taking place, who is buying, who is selling, whether there is any concentration, whether any money is flowing in a particular manner or not, and whether there is any fear in the market that needs to be looked into. SEBI has started what they now call it additional surveillance measures, which means 2-3 things. If there is any technical term you would like me to explain further, I'm happy to do that. One is dynamic margining. It can also lead to what is called trade to trade. And ultimately, it can even lead to debarring somebody. For example,
oh dear, you've frozen, sir. Can you hear me?
25% shares are.
Forgive me. You froze for a moment. Could you go back? You were just explaining debarring, and you froze at that.
Yeah. So there are 3 stages. There are more than 3, but let us concentrate on the 3: dynamic margining, trade to trade, and even debarring people. Now, in dynamic margining, depending upon the volatility in the market, SEBI can introduce higher margin. And as reports say today, that stock exchanges have also confirmed that virtually the margining that has been introduced is going to be 100%. That means you have to put 100 rupees to buy 100 rupees worth of shares of Adani. Whereas in a normal day, only about 20-25% shares are actually delivered and about 70-75% are squared off during the day. Yeah, you have a question.
I was going to say, I understand the point you're making about surveillance. As you correctly point out, both the Bombay Stock Exchange and the NSE have already put a number of Adani shares under additional surveillance. But here we have a situation which is more than just worrying. This stock, as of this morning, Adani Enterprises, was 60% lower than its value on the 24th of June. That's a huge drop. Surely, in this instance, to reassure people, both in India and abroad, SEBI could have said, we will be instituting a formal investigation and inquiry. After doing so, we're not going to comment every day on where it's going. But when the inquiry result is known, we will make it public. That would have ensured that people are confident that SEBI is actually actively taking this on board. At the moment, although 3 shares have been put under additional surveillance, there's no talk about an inquiry. There's no talk about an investigation.
I would be surprised if inquiry has not yet begun already. And having worked in SEBI, I know that inquiry takes some time, because you can't work only on the basis of what one party complains. And here, the interesting thing is that the complaint has been from one party, alleging several things, but mainly saying that there have been accounting frauds, for example, there has been money laundering, there has been round tripping, money has been brought from related party transactions, from tax havens and things like that. And also that the company is heavily leveraged. Now, Adanis have made a response of about 400 plus pages. And now the group has also said that they have come out with a response on Adani's response. And they are saying that Adanis have invoked some nationalistic and patriotic things as if it is an attack on India and things like that. And they have still not answered 66 out of the 88 questions that they had raised. Now, you can imagine the volume of these things. These things cannot be decided on one day by any authority anywhere in the world.
Absolutely, sir. Forgive my interrupting. There's no doubt about what you're saying, that this will take time, investigation, and it needs to be done methodically. However, given that we're talking about a serious situation of market manipulation, round tripping, we're talking about accounting that is in fact considered that has been done by young children in their 20s and 30s. That may not be proven, but that's the allegation made. Surely SEBI in this instance could have announced that they're doing an inquiry. You're saying you find it hard to believe they're not, but SEBI hasn't announced it. And I'll give you one reason why they could have. When Mr. Adani made his little video, he was effectively accepting moral responsibility for what has happened. If he's gone that far, shouldn't SEBI have said, we are investigating, and then go no further till you get the outcome?
Well, my response to this query is that normally SEBI doesn't do it for a very rightful reason, that if they start saying that you are inquiring against a company, it will affect the sentiments about that company and may harm even the larger market. But based on what you are saying, perhaps they should have given some indication. Let me also tell you that regulators have various means to communicate. It's not that some official press release has to come. Something can come through the stock exchanges, something can be told to people who are playing heavily in the market and things like that. But having said that the surveillance action, which is the first firefighting action, that has already begun.
Absolutely.
And you will discover that once you get into the surveillance action, having a very sophisticated surveillance action, SEBI has all the data, which can run into lakhs of data, to find out who has been trading, where has the money been coming, because fortunately our KYC system in the market is also strong. So all that thing are possible.
But I will repeat for the audience the very important way you began this answer. Perhaps SEBI should have indicated in some way that they are carrying out an inquiry. Now, let me come to a second issue. It's not just the concern of today that makes people think SEBI should be inquiring. There have been concerns about the Adani share price for a while. Over the last 2 years, their share prices have increased almost vertically. They shot up monumentally. Maybe at that stage, SEBI should have begun inquiring into what is happening, because it was a very unusual vertical rise. Or when credit sites came out with a report 6 months ago to say that Adani was hugely over-leveraged, that was a second point. Shouldn't SEBI have woken up to this a year or two or more ago?
Let me say that almost 6 months ago, Fitch pointed out that the company is over-leveraged. This is not for the first time that this is coming into public memory. Even 1 year prior to that, there was another research report saying that the leverage level is very high. And let me give you some numbers. In 4 years between 2018 and August-September 2022, their total debt has gone up by twice. So they have reached a level of around 2 lakh crores, or almost $30 billion, which is a huge number. More importantly, what is called the net debt to EBITDA, that ratio has gone up substantially for some of the companies. For example, for a company called Adani Green Energy, it has gone up to 15x. So the debt in comparison to the EBITDA was 15x, which is very, 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 very high. Adani Enterprises were 10x. For other companies, it was 5x and 6x. Now, the question that you have in your mind, why did SEBI allow that, or why didn't SEBI act? I would like to disabuse you and your viewers that this is not SEBI's job. My question would be to the independent directors of the company. My questions would be to the bankers of the company. My questions would be to the auditors of the company.
But even the sharp vertical rise in Adani shares over the last 2 years was not a cause or reason for SEBI to inquire?
Unless there is some complaint, like this time the complaint has come about manipulation, it is not. And also I would put the blame or the responsibility, not the blame, on the type of board governance which these companies have and the type of independent directors and auditors. For example, if I was the auditor of that company, I would definitely ask that how are you going to sustain a debt to EBITDA margin of 15x? And not only that, if you look at our Sensex or Nifty is trading at a price earning multiple of maybe around 20 or 21 right now. And here are some of the companies which were trading, can you believe it, 850 times?
Absolutely. But sir, in a
total
sense,
gas was 850 times.
But in a sense, aren't you making the case for me? I accept that the concerns that I've mentioned are concerns that the governance of the company should have looked at or auditors should have looked at. But it's been speculated and actually spoken about for a long time that huge vertical rise in Adani shares that happened over the last 2 years was as the result of the Adani's own money coming in, round-tripping happening, market manipulation happening. We didn't have a Hindenburg report that laid out the details the way we do now, but this was speculated and talked about quite openly. It wasn't a bedroom secret. Surely at that point, without going public, SEBI should have been inquiring.
Let me say that to the best of my information, the fact that there is round tripping happening, and that is why the share prices have gone up like this, according to my understanding and knowledge, that has come in public domain for the first time after this Hindenburg report. But it is not SEBI's task or even RBI's task to look at what price they are trading, unless there are some complaints or there are some information available to SEBI that something hanky-panky is happening in a company.
Let me draw your attention to something that the Trinamool MP Mahua Moitra has made public a couple of days ago. In a letter that she's written to the present chairperson of SEBI, Madhavi Butch, she says that the Minister of State for Finance in Parliament confirmed in 2021 that SEBI was investigating the Adani Group with regard to compliance with SEBI regulations. This was confirmed in Parliament in 2021. Mahua Moitra has now made it public. A few days ago, the Adani CFO has announced that SEBI dismissed the charges against the Adani Group. Now, as far as I know, none of this is on SEBI's website. It's confirmed because the minister confirmed it that SEBI was inquiring and doing an investigation, but we don't know the outcome of that investigation from SEBI. We only have the Adani CFO claiming his company was clear. Shouldn't SEBI have made this clear to the people? Let us know the outcome.
I'll concede this. I'll concede this point. I'll concede. I'm not talking on behalf of SEBI, or I'm only trying to say what I think is the way SEBI functions. But if you are saying, and you are right, that the honorable MP has said like this, and then the CFO has said that SEBI found nothing. And let me tell you, almost 70, 80, maybe 90% of the complaints that SEBI receives are found to be incorrect. And people have to appreciate that the type of complaints SEBI receives are very, very technical, extremely technical. If you permit me, I like to bring you to the very famous example of the co-location issue in National Stock Exchange, where the allegations was that 10,000 or maybe 15,000 crores worth of money was made by the person who was able to access the co-location, being the first in the morning and remaining first in the morning. But look at the recent judgment of SAT. SAT has completely set aside the orders passed by SEBI. So these are not matters which can be decided because people are voting for it or people are feeling for it. It has to be decided based on very critical examination of facts, which can take time.
I take your point completely, but again, I'll point out to the audience that you began by saying that you concede the question I was making, that SEBI should have made public it was inquiring into Adani compliance with the regulations of 2021, and having started that inquiry, they should let us know whether it's ended, and if it's ended, what the outcome is.
No,
And if it hasn't ended, then it's even
I
more concerning
sorry,
that it's carrying on for 2 years.
I conceded the point that if you, and you said that SEBI, CFO has said that SEBI found nothing. If this part is correct, then this should have been brought into public domain. I'm conceding that point.
Let me raise something else. I believe that the Hindenburg Report has also raised questions about SEBI. It's been said that there are allegations of incompetence, partisanship, and even corruption. How should SEBI respond to this? Because this is not about Adani. This is Hindenburg raising questions about India's market regulator.
I'm shocked at this allegation. I think SEBI and Reserve Bank of India are two of the most important regulators, and they have done this country proud, especially in the last 15-20 years. I concede that prior to 2001, we had repeated incidents of market misconduct, and the regulator was found wanting there. But that is because of the initial days of SEBI. But it has matured a lot since 2001, 2002. And I would be surprised if people feel that SEBI is incompetent. In fact, there has been a case study by Harvard University when I was there, and there they have compared SEBI's actions to be one of the best in the world. The International Society for Regulators, it is called IOSCO, International Organizations. They rate SEBI very high. They have brought SEBI into the executive committee and things like that. So I think this is not a very responsible statement being made by Hindenburg or anybody who has made it.
Let's come at this point, Mr. Sinha, to the government's response. Now, I know normally governments don't comment on what's happening on the stock market, and certainly governments don't comment on individual companies or individual groups. But once again, this is an issue that has attracted widespread international attention in a way that is unprecedented. It is front page news for 2 or 3 days at a time on Britain's Financial Times newspaper. So this problem has acquired a dimension few earlier problems had. And yet, other than two very dismissive comments made by the finance secretary today and the finance minister, the government is silent. The finance secretary has said that the holdings of Adani Group shares by SBI and LIC are too small for any cause of concern. And the minister has very bluntly said, there's no problem with regulation in India, full stop. Do we not need more assurance from the government? Because this is a matter of international concern rather than these quick dismissive comments.
I read the comments made by the Honorable Finance Minister, and I think her comment is about the regulatory system in the country and the regulatory capacity, rather than dismissing things. Because, you know, if you are the Finance Minister, you have also to be very mindful of the fact that you are not starting to talk on behalf of the regulator as if you are taking the decisions. The regulators have to be independent, have to be slightly away or distance from the government, day-to-day government. On the one hand, we are arguing that government should make a statement. We are arguing that SEBI should make a statement. And on the other hand, we are saying that why is the government not doing much? Why does the government doesn't say much? I agree that there is a fear in the market. My feeling is that from the surveillance actions that SEBI has done, and those actions are visible today, people will find that more and more actions are being taken. The primary task of regulator today is to ensure that the fear is removed. Primary task is to ensure that the market functions smoothly and the interest of shareholders are kept in mind.
But the primary task of the government is a little different to the primary task of the regulator. The government's primary task is to ensure people abroad that India's stock market is of good standing, that there is not market manipulation, round tripping, money laundering, or fraudulent accounting techniques carrying on. That assurance has to come from the government. Shouldn't the minister find a way, a form of words to address that concern? Because it's not a concern limited to India. It matters abroad, to Dow Jones, to the Norwegians, to Citibank, to Credit Suisse, to the Financial Times, the Economist.
Let me tell you that Hindenburg has not come out with its report, research report, or its short selling activity for the first time in its history. There was a very famous company called Nikola in the USA, and they came out with their findings, and they were proven to be right. So SEC imposed a massive penalty on them, and they were convicted for fraud.
So can I point out, Mr. Sinha, that of the reports and investigations that Hindenburg has done, 75% have led to the shares of the companies investigated tanking precipitously to the point where Nikola was virtually wiped out. And that's happened in 75% of the cases, which is why when Hindenburg does that to an Indian company, international concern is huge, and there's need for the government to insure investors abroad, particularly if you want their money.
Yeah, let me answer your question. So you are right that at least there are 4 or 5 cases that I'm aware about the Hindenburg Report, and Nikola is the first example that I have in mind. And SEC penalized them; they were convicted for fraud and all. But the point is, did anybody started making an inference that the US securities market are completely out of control just because something happened with Nikola? They also took action in case of Twitter, for example, when there was some doubt about Elon Musk getting into it or getting out of it. They took a short position, then they took a long position. They changed that. They have done it about China Metals. And China Metals was proven to be right, but then do you say that the Chinese market is completely out of control?
Very interesting example.
Why are we drawing an inference here?
Forgive my interrupting you. It happened in 2020, and I believe that Beijing immediately ordered an inquiry and said so publicly. That's the difference.
Yeah, that we know now. That we know now.
But they did it. That's the important thing. What I'm saying to you is that we can't really compare the way the world views the US stock exchange with the way the world views the Indian stock exchange. The two are very different.
And the Chinese stock exchange.
There is a certain measure of need on our government's part to reassure the world, particularly when we are hoping that people disinvesting in China will come to India, particularly when we want to be that China 1+ strategy. Now, I'll quote you what the Financial Times well-known Lex column, which is widely read, said yesterday on the 2nd. They had a whole column analyzing the impact of Adani on the Indian stock market. And the last sentence was, loose capital will now favor investments in China. That would be terrible for us if that actually happens. But
I also had occasion to read that column, and the only reason because loose capital will prefer China is not because of this Hindenburg complaint against one large Indian group. It is also because of the sentiments changing about China. It is also because of the measures taken by the Chinese government to revive the economy. So let us not jump to these that's the simple point I'm trying to make is, this is an important matter. I'm not saying that this is not an important matter. And while you are right that in case of China Metals, things happened and took place and action was taken by the Chinese regulators, wait for some time. This action will be taken here. I will be more than surprised. I will be shocked if that action is not yet initiated. Finally, on this particular point, my take also is that if the Adani incident had affected the larger market, then I would have agreed with you that the government should be worried. But you are noticing that this has had no impact on the larger market. In fact, our market today has gone up.
Okay.
So this is about one particular set of companies. And although you dismissed my plea about role of the auditors and bankers and governance, but I would like to reiterate that there is a larger lesson in it for India Incorporated. If you allow me, I can talk about these issues.
I take your point. Yes, absolutely. India Incorporated needs to be far more conscious of their internal board governance as well as the sort of accounting that they subject themselves to, because that is an area where there is genuine concern, not of individual companies, but across the board. I accept that point completely, but let me just sum up what we've discussed. Would the audience be right in saying that Mr. Sinha does not share the concern expressed by Karan, A, about SEBI silence, and B, about the government silence? You think both have responded adequately in the present circumstances?
you are framing it in a very narrow sense. Let me put it this way, that the response of the government and the SEBI so far, I would not call it to be out of ordinary. This would have happened in most other cases in the normal course. And I would also say that if this had an impact on the larger market, then there would have been definitely a case about government and SEBI coming out more openly. And this is not because of any other reason, but for the simple reason that history tells us, our experience tells us, that it is better to do it in a routine way so far as the communication is concerned, rather than start jumping on each and every complaint. Look at what RBI has done. RBI has started asking the banks whether they had a concentration on this group of companies, what is their exposure and all. But have you seen any RBI press release on this? No. A banker has told the media, and that is how everybody has started believing. And I think it is a true story. But RBI doesn't say, because if RBI starts saying that, yes, we are inquiring about it, on day one, without some preliminary findings, it becomes a difficult.
But same applies. Just to take your example further, the government could have spoken the same way. The government is extremely good at feeding information to sources and ensuring that every paper gets it. The RBI spoke to an unknown banker, an unnamed banker. Every paper today has it. The government could have adopted precisely the same route.
Just to take it a little further, I think when stock exchange sources told today or yesterday, and it came out in the paper this morning about surveillance measures, I think it was something similar to what RBI did. So maybe it has come from SEBI. I don't know.
The government has done the same thing.
Yeah, but you must also talk about how a price earning ratio of 850 was allowed to continue for months and years together. How a 15 times multiple on the EBITDA was allowed to be done, and the independent directors of the company or the auditors. If I was a banker, I would have asked. If I'm a banker to a company and they have so much of debt, I would have asked them. Absolutely. I would have withdrawn if they are not.
And what you are really saying, aren't you, sir, is that the repercussions of what has happened raise question marks about a lot of different entities. The governance of the company, the bankers, the accountants, even analysts. These are issues that they should have been flagging months, if not years earlier. The system as a whole in the large has failed to raise concerns at the right time and in an adequate way. That's what you're saying.
And also the role of the independent directors. I think independent directors should have performed a much more proactive role, which which they have failed, in my opinion. And also, let me make you one last point.
Can I just add, sir? The sad part is those independent directors, I won't name them, that would be invidious, have been approached by us for interviews, but have declined to speak.
Oh, I see. Let me make one more point, and I'll stop unless you have some further questions. The minimum public shareholding in Indian companies, which means what is the public float available, has been a matter which has been neglected by corporate India, and if I may say so, also by the government. Even in public sector undertakings, we do not have the MPS, minimum public shareholding requirement, being followed. And this is a great safeguard against certain wrong practices being followed, because you have to have people who can ask questions in the board or in the AGM. But unfortunately, the culture has not yet percolated. We have very high percentage of promoter shareholders, both in public both in PSUs and in private companies.
I'll elaborate on the point you make before I end. The Indian Express a couple of days ago revealed the percentage of Adani company shares that are in private retail hands. It seems the promoters of the company control something between 65 and 75, depending upon the particular company you're talking about. Institutions control a large amount of the rest. The actual holding in the hands of private retailers varies depending upon the company between 1 and 3%, which is why the stock is so easy to manipulate as well. It is such a fraction of the holding. And this comes back to the big point you made, that the Adani scandal, as it's being called, has raised serious questions about a range of people in the system, from governance to auditors to stock markets to analysts. These are all questions, as you said, that should have been asked not months, maybe years ago. And that raises a bigger question about the way in which India handles the stock market, investment, analysts looking at companies. All of that needs to be thought about carefully. And I thank you, Mr. Sinha, for raising these wider, deeper issues, because these are actually the longer lingering concerns. And these concerns, if not handled, means that people will not have a full understanding of the companies, and they'll be investing in companies without fully knowing the risks they're undertaking. I thank you for opening our eyes to this.
Thank you so much. Thank you. Bye.
Thank you, Mr. Sinha. Thank you very much indeed.
Hi, I'm Karan Thapar. Over the last few years, I hope you've been watching my program, The Interview on the Wire. During that period, I've interviewed doctors, politicians, businessmen, scientists, authors, and even the occasional Nobel laureate. For me, it's been exciting. I hope it's been enjoyable for you. But these, as you know, are tough times, and if this program is going to remain bold, independent, and sometimes even defiant, then I think we need your support. At the end of the day, it's a truism, but editorial independence is best defended by the viewers. So if you would like this program to remain the way it is, forthright, outspoken, and interesting, then would you consider supporting us? All you have to do is to click on the description at the bottom. But more than anything else, I hope you will continue to watch The Interview. Your viewership means an awful lot to me.